Hello and welcome to Pro Trader Strategies Market Commentary for Monday, June the 20th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data today, but the market is pushing higher. Crude oil is pushing higher. Mostly, I think in regards to the fact that the Brexit isn't really going to happen. I don't think that there's going to be the exit everybody's been talking about. It looks like all the polls are saying that Great Britain's not going to leave the EU. So having said that, the overall markets I think are pushing higher in celebration of that. As we're looking here at crude oil, you can see /CL pushing right up against the value area high that's going to act as resistance all the way from right around that $50 a barrel area. If you remember, this was a value area high, has pushed slightly higher and is reflecting that $50 a barrel that I've been talking about so much, just shy of that at $49.83, up $1.27 right now. On to the E-mini NASDAQ /NQ. As you can see, we kind of gapped higher this morning. Usually we don't see a big gap. Overnight session in the NASDAQ gapped higher. Overnight session in the ES also gapped higher. Also probably due part in fact to the lack of Great Britain's push to exit. Now, like I said, the people are saying they more so would rather stay than leave. And NASDAQ up about 65 points right now on the day, pushing away from that value area. As you can see here in the E-mini S&Ps /ES, also gapped higher. This is basically where we closed on Friday and gapped above even the open of Friday's trading session. And E-mini S&Ps up 26 points on the day and continuing. Well, it's actually starting to come off now recently in the last hour or so. Here's a daily chart of the mini S&P /ES coming off, like I said, pushing down to this value area low for all intents and purposes. We're going to have to really see what goes on. There could be a lot of profit taking coming into the market heading into the last half of the day. I want to look at gold right now. As the overall markets rally, the equity markets push higher. Gold is really inversely related to the equity markets. As the equity markets push higher, gold loses a little bit of its luster. And as you can see here, it's down about 6 points on the day /GC, which is the futures for gold, and trading around $1,288 a 100 troy ounce, or for a troy ounce, I should say, of gold. But the overall market is inversely related. So as equities have come off, we've seen gold start to push a little bit higher during that. This is also inversely related to the equities. So when the equities are rallying, bonds are pushing lower. So as you can see, this bonds down over a point right now, but off of their lows. The reason why I wanted to show a bond chart is because of all of these inversely correlated products. But if bonds go down, that means yields are going up. And if yields start going up, that's going to be good for the banking sector. So a lot of those banks have been beaten up. You remember I was short some Capital One Financial. Goldman Sachs really got beat. Today, Goldman Sachs, which is GS, ticker symbol, is pushing higher. Capital One Financial is COF, is the ticker symbol for Capital One Financial, or Capital One, which everybody calls it. But if the rates yields on bonds and everything else starts going higher, then we're going to see those banking stocks that have been beat up benefit from that. So in that regard, with Capital One Financial, I went back to the well on this one, but I went to the other side of it, and you can probably get this on a little bit better than what I did, because I did it early this morning, and I went into the July 60 puts and sold them for 52 cents. Now, again, that was when the equities were pushing a lot higher. Capital One Financial was lagging some of the other financials, so Goldman Sachs was up pretty big, so I decided to go into Capital One Financial to hopefully see them kind of catch up with the rally that we were seeing in the rest of the financials. It was just one of the ones that was not participating as much in that rally, but as the equities have come off and bonds start to rally a little bit here, the financial sector is hurting for that. But that's the only trade that I've really done today. I've had a lot of trades kind of expire over the weekend, or from Friday on that expiration. I had Lululemon expire. I had the JNK, which is the high yield bonds. I also had Lilly expire. So a lot of those just kind of expired worthless, and or for the credit that I received for them in the beginning of that trade. So other than that, Friday we've got a webinar coming out. We're going to do it on 4-man's covered calls. So if you have a smaller account size and don't really have the margin in that account to be able to go out and buy 100 shares of Twitter or Apple or something along those lines, and then do covered calls to lower that basis, we're going to talk about different strategies that you can build a synthetic long position in a stock and then lower the basis by covering it with calls. So if you have a smaller account size, this is going to be a great strategy to implement them into that, because it will act just like a long stock position. So go to Pro Trader Strategies, sign up for that one. Last Friday's was a great one. It was on the put calendar spreads, and that was really well received. You can go to Pro Trader Strategies and sign up for that too. Get that sent to you. If you can't take that, take it easy.